After leaving a trail of destruction in Haiti, the Dominican Republic, and Cuba, Hurricane Laura is now threatening the U.S. Gulf Coast.
Just from a historical perspective, Laura is shaping up to look a lot like Rita did 15 years ago in terms of its forecasted intensity and the forecasted spot where it will make landfall in southwest Louisiana.
Authorities have issued mandatory evacuation orders for 500,000 people in many parts of Texas, Louisiana, and Mississippi. But the knock-on effects of the storm could engulf the entire US economy. That's because it's shutting down the country's largest oil producers. More than 300 offshore rigs have been evacuated, shutting down 85% of production in the Gulf of Mexico. Dozens of oil refineries, which provide 85% of America's petroleum, have also been closed. The extent of the impact on US fuel supplies will depend on how long it takes to reopen all the rigs and refineries.
Obviously, this hurricane moving through the region is going to be disruptive in the near term, but how long it lasts for is going to be the big question. Now, it's supposedly taking out around about 1.5 million barrels of oil per day out of US production. Now, that's somewhere around about 12-13% of total US production. So it is quite a big whack. And if it lasts for several days, then that is going to take a sizable chunk out of that production levels. And obviously, then we'll be looking out for how it impacts on the inventory levels in the coming weeks.
Experts say the immediate storm surge could cause at least $18 billion in damage. If oil producers aren't up and running again quickly, the toll on the US economy may be heavier. Mobin Nasir, TRT World.
Well, for more on this, Ellen Wald joins us live now from Jacksonville, Florida. She's president of Transversal Consulting and an expert on international oil markets. Welcome back to the program, Ellen. Now, the pace at which Hurricane Laura is intensifying is taking many people by surprise, but oil companies, energy companies have at least been quick to respond. Can you tell us more about the impact that these shutdowns along the Gulf of Mexico are having on US output?
So it's very interesting because the hurricane has been compared a lot to Hurricane Rita from 2005. And that hurricane, which was actually preceded by Hurricane Katrina, which did even more damage, really did cause quite a bit of disruption to oil production and also oil refining in the region. Now, we're actually in a very different place now than we were in 2005. The United States produces a lot more oil. So when you're looking at a reduction of about 1.6 million barrels per day of offshore oil production, and that could last, we'll see that show up in the numbers next week, possibly into the week after that. But these offshore oil platforms are designed to withstand very severe weather. So once the personnel get back, I don't think it will take that long for production to restart unless there's some kind of very severe damage. But we do have, what we have right now are very high inventories of crude oil. As of last week, we're still 15% above the 5-year average for crude oil inventory. So while, yes, it's shutting down production for a time in the Gulf of Mexico, we're not expecting to see a huge impact on prices or availability of crude oil because there's such a large inventory to fall back on.
So how long could these disruptions last? If the hurricane makes landfall, doesn't cause as much damage as has been forecast, could these companies, these offshore facilities, come back online sooner rather than later?
Absolutely. The offshore facilities could definitely come back online, as soon as the hurricane and any damage has passed and people are able to get the personnel back onto the platform. So, it could last a week, it could last maybe into 2 weeks, but really, I think we'll see it come back online fairly quickly. The refining capacity, though, is another issue and also the export capacity is another issue to look at because if refineries are down, that can lead to a backlog in terms of of, and actually a build in crude oil stocks if refineries aren't there to process the oil. And we saw some of that happen with Hurricane Harvey in 2017, when there was very severe flooding, and that caused a breakdown that caused infrastructure damage in refineries and also in pipelines. Now, it's not clear that we're going to see the same conditions and the same kind of flooding, although there is great concern about storm surge with this particular storm.
Now, as we know, this is happening during a pandemic in which demand for oil and gas has taken quite a significant hit. Prior to this hurricane, had these oil and gas producers in the US, I guess, got their production back up to normal levels, or had they accounted for this lack of demand?
So we're still seeing refineries running at lower rates than we typically be seeing at this time, though they're much improved from where they were before. And gasoline is definitely being drawn down. Gasoline inventories in the U.S. are about 5% above the 5-year average, which is better than crude oil. And certainly we've seen improvements in gasoline demand, but we've still got plenty of gasoline in storage. So barring any kind of problems to pipelines and distribution networks, we're not likely to see huge jumps in gasoline prices like we saw after Hurricane Katrina and Hurricane Rita.
Okay, Ellen Wald from Transversal Consulting, a pleasure as always. Thanks a lot.